We're also privileged to have the MD of Tessa Capital Limited, Mrs. Eugenia Bashir, here with us. Thank you, Madam, for bringing the Tessa Investment Dialogues to City TV. Long may it remain.
We expect so.
Wonderful. And sort of prelude your comments with two things. He says cautiously optimistic. Do you agree? He says people are still investing. Is that true? What are your comments?
Okay, thank you very much, Bernard. And I've enjoyed the discussion so far, very insightful. And so the economists have said their bit. How does it affect me and my investors, my clients? And so I agree, cautiously optimistic, because once again, I'm going to borrow from the economists. They keep saying all things being equal. Exactly. So we've heard what the budget is saying, and I think that's a premise Prof was coming from. So we're looking at what the government is intending to implement, and therefore what is the effect on investors, and how should we invest? I picked a few things from what he said. First of all, he suggested that Bank of Ghana may have to move away from their inflation targeting approach, but they haven't. What we have, and from what you said from your discussions with the new finance minister, it looks like he's going to follow this path. So what we are going to have is inflation targeting. So I ask myself, how does that affect investments and investors? As long as we keep targeting inflation, it means that interest rates are going to remain relatively high. A lot of us were surprised when we saw that the policy rates did not was not reduced as much as we were expecting. But it looks like they had seen more of what was in the pot. They knew that inflation is still sticky. If we look at what came out recently, it went up slightly from 23.2 to I think 23.6 from 5. So they know that inflation is still sticky. So it means that Bank of Ghana is going to continue targeting inflation. What does that mean? It means we are going to see treasury bills still being on the market at these high interest rates. The question we keep getting investors asking us that, is there going to be a haircut on treasury bills? And I keep telling them it's a question I cannot answer. Because you cannot rightly predict or essentially predict what the government is going to do. You may use all your economic variables. Dennis is a member of our research committee at Tessa. I remember somewhere early 2022, if you remember, I called him and I said, Dennis, I'm worried about the government debt. What is happening? What do we do? He said, give me a few minutes, I'll call you back. He called me and he said, Eugenia, do you want the truth or you want me to massage it? Dennis, I don't know if you remember this conversation. I said, give me the truth. He said the debt levels are unsustainable. So we're having the conversation. I said, Dennis, what are we going to do? He said, well, the only clear path I see is an IMF program. It's inevitable. An IMF program happened. However, in that conversation, we did not anticipate haircuts and restructuring, and especially to these levels. In that conversation, we spoke about possible restructuring of the Eurobond. But we were not expecting domestic. Now, why am I saying this? Similarly, we may look at all the variables, and I'll point out to another one and say that T-bills is not likely government to touch T-bills. Why? Because if you look at the budget, and you look at how government is intending to fund their expenses, it's T-bills. T-bills is plan A, T-bills is plan B, T-bills is plan Z. So it will be suicidal for them to touch what is going to be their lifeblood, at least for the next 12 months.
Good.
So based on that, we can comfortably say that we don't expect that there's going to be any restructuring in T-bills. And so for the short term, it looks like we're going to see these high rates on T-bills. What is the effect on that? Mr. Fezi was just saying it, and I think it came out. It's crowding out everybody else. Because once again, we are seeing huge oversubscription in T-bills. And that's why Dennis is saying Ghanaians like T-bills. And so everybody is once again going to give their money back to government. And what's happening to industry? Where do industries get money from to grow? So that when they're on the stock exchange, they're churning out the sort of returns that will make it attractive. So that when you're telling people about stocks, sometimes you're talking to people about stocks and you are able to get their interest. Then the next year, you see the market dives, and then all the talk, people come to you and say, you said I should buy stocks. Look at what is happening to the stock market. And it's difficult to explain to people that it's a long-term, to look at the long-term outlook. At the end of the day, they are looking for a return. So there are effects to what is happening in terms of for investors. So yes, we can all continue to run to T-bills, but what is the long-term effect for the economy? I'll tie in with the effects of the DDP. So we have restructured, and there have been hard lessons. Investors have had a raw deal. Investors have lost their money. People's lifestyles have been so negatively affected. Maybe I'm so passionate about it because I get to meet them one-on-one, so I know what investors are going through. In spite of that, we've learned lessons, and it is forcing us to innovate. We all got comfortable. We all ran into treasury bills, government paper, government bonds, because we all thought it was safe. These days, I say it cautiously, relatively risk-free. Exactly, so relatively. And now what is happening is we are all being forced to look at what the alternatives are. So I'm talking to investors more about the stock market. And we are being forced as investment advisors or analysts and fund managers to come out with products that are alternatives to government paper. So for example, we are seeing a bit more corporate debt on the market. As Eko said, Kasapeko has come to the market to raise money. We've had more interest in debt issuances by companies, by corporates like Bayport, Eastway, and the likes. And the interesting thing is that you find that these companies are actually borrowing at rates that are lower than government. They're supposed risk-free government. Kasapeko came to the market at 28. Bayport came to the market and borrowed at 21. Exactly. So it's telling you that there's even more confidence in these corporates than in government. For investors. So these are some of the key things. There are a few things on inflation and things, but I'm sure.
There's also a question on pension funds. How can we unlock them to drive more growth in the economy? I think you hinted about that. If you can elaborate, that would be nice. So I think the question about mining, I think the talk about nationality of the mining company, and then the second question was on competitiveness from diversification, and then there's a question about unlocking pension funds as the next frontier. Mrs. Eugenia, pension funds, what are your thoughts on that?
Okay. The first time I saw the Pension Act before it was passed into law, I thought that, yes, this is going to drive growth in Ghana. Because when you look at other economies, that is what has happened. We see pension funds from other economies, even in Africa, coming into Ghana to invest in ventures here because they've grown the pension funds to the extent that they can invest outside their country. Today we have pension funds of over 30 billion. Where is this sitting? Unfortunately, I'm sure 70 to 80% is sitting in government paper. There are different sides to this. Do you blame the investors or the pension fund holders for investing in these instruments? Not necessarily. We were all running to safety. Government is safe. If you have a safe instrument that is giving you over 20%, at that time inflation was lower, so you are beating inflation, it means you are getting real return. There was really no incentive to find other avenues. So that is where, when I say that there have been positives to this DDEP, this is where it comes in. So now pension funds are beginning to look for alternatives. And this is where I expected to see pension funds driving growth in the economy. I haven't seen the statistics, but I'm sure if you look at the Kasapreku issuance, I'm sure a large chunk of it will be from pension funds. Most of the investments you're seeing outside government issuances, you find that is pension funds. And as fund managers, the pension fund trustees keep tasking us. What are the alternatives? What else can I invest in? So recently we've seen a REIT, a real estate investment trust, come to the market to be able to raise funds to purchase a real estate property here in Airport City. And you find that a lot of pension funds invested in it. So it's up to us now to take advantage and create the investment instrument. And I'm sure you see a few coming up over the next few months. I know there are more REITs coming up, there are debt funds coming up. So this is what will go to build the economy. And it's important. That's why I am not too much of an advocate for pension funds being allowed to invest outside. I may not be popular for saying this, but we need to use the funds to develop our economy.
Wonderful.
Before we start looking at taking pension funds outside.